Okay, so good evening, everyone. My name is Dr. August. I'm a first-year family medicine resident at Mercy Health St. Luke's Family Medicine Program, and I am very happy to introduce the Chief Executive Officer and co-founder of Doc2Doc, Dr. Zwade Marshall. So Dr. Marshall, he trained at Emory and Harvard, where he completed a residency and fellowship and is double board certified as an anesthesiologist and interventional pain management specialist. He's also the chief medical officer of regenerative spine and pain specialist. One of the things that I really appreciate about Dr. Marshall's story is the fact that he can actually relate to our physician journey. In particular, when you learn about his path, it was actually while he was relocating from Atlanta to Boston for fellowship that he kind of realized how unfairly banks were underwriting early career physicians as they were burdened by, high student loan debt, relative low income, and suppressed FICO scores. And that experience is actually essentially what led him to partner with his co-founder to start Doc2Doc. So personally, being someone who's actually benefited from the Doc2Doc loan program, I am very excited to introduce Dr. Marshall. And for those of you interested in learning how I personally use Doc2Doc, stay to the end, where I do plan to share my own personal experience. And with that, Dr. Marshall, I'm going to pass it to you.
Dr. August, thank you so much for the warm introduction. It's a pleasure to interact with you and with the platform. And Dr. Walker, thank you for the invitation as well. It's really a privilege for me to be here with all of you. And as someone who benefited from the community aspect of residency programs and of residency program communities, and certainly of being a doctor of color, I can certainly appreciate all that's happening on the front lines in primary care, and all the pressures that are thrust upon you all. We are seeing within our Doc2Doc cohort a large number of our family medicine peers looking at doing direct primary care as opposed to being employed. And I think the pendulum is swinging, where we're becoming more empowered as a community, and a part of what our company is meant to do is to help folks to find that independence. Let me share screen here, and I think for the audience members, know that I'll give an overview of who we are, define the problem, and describe the solution that we offer at Doc2Doc with some bit of market sizing and portfolio statistics. I'll talk about the team briefly, but really it's to tell you all of a journey that I've been on personally, that led me through medicine, but also into entrepreneurism. And oftentimes when I speak to cohorts like this one, I think what people seem to engage most around is how do you do something else outside of medicine? How do you find the balance? How do you create the bandwidth? And how has it been working to kind of do both? Quick disclaimer, this is not a presentation that's intended to give any legal, financial, or investment advice. I'll be presenting some things that are proprietary to the company, and I hope that we keep it within our tight community here. We are going to record and we'll share it afterwards, and so feel free to utilize as well. The goal will be for anyone listening to this talk to have an understanding of some of the factors that impact the credit approval decisioning process. We see as lenders the ways in which our peers are certainly impacted by having high student loan debt, relatively immature FICO scores, and low income at a time during their training that makes it hard to access capital through the traditional lending markets. And that's why the company was founded. So I'll share some of that data with you all over the course of the talk. We want to ensure that you also have an appreciation for what's unique about us as doctors when it comes to borrowing, and then reviewing some of the business elements that we use to underwrite our loans, and knowing the variables that you should use to compare a loan offer. Do you just look at interest rate? Do you understand what an APR is? How does a loan term affect your payments? And what's the prepayment penalty? And then certainly the different loan types, whether it's revolving debt or installment debt, whether it's commercial loans that are backed and guaranteed by your practice or your business, or if it's a personal loan. As Dr. August shared, I am a practicing anesthesiologist, interventional spine specialist. I have a 47,000 square feet medical facility in a suburb of Atlanta called Fayetteville, and a second location in Buckhead, Atlanta. The actual procedural suite is a surgical center that's 5,000 square feet where I do fluoroscopically guided procedures. So think of me as the guy that treats sciatica, herniated discs. We do radiofrequency ablations and spinal cord stimulation as well. I do maybe 20% of the practice is personal injury work. So folks that have been injured in an automobile accident, and then the 80% are just insured patients. Um, Tied to this, and so a part of the lens through which I'm able to lend as a CEO of a lending platform is I've accessed capital for personal loans while I was in training, and then for business loans to start my practice, to fund the expansion, to pay for equipment, to build a surgery center. And so my personal interactions with the credit markets gives me a sense of empathy for what borrowers go through and the ways in which I felt like I was treated unfairly through the process. Like many
Dr.
of you, I've,
Marshall, can I just interrupt you for one moment? Would you be able to bring it to slide presentation just so that we can see it a bit larger?
of course,
Thank you.
sure. Does that work? Yeah. Awesome. So like many of you, I have a family, young kids, a 6-year-old and 8-year-old, Nyla and Sule, and my wife is an attorney in the healthcare space, and this is a part of my why, right? It was a thrilling thing for me to have them come into my place of business, to my work that I might practice when I opened it up, for them to see what daddy does on a daily basis. I try to convince them that I'm a serious person and do a real job, and they think I'm the house clown most of the time. Now, the story of the genesis story of the company, Dr. August gave you really a very accurate version of things. I went to medical school at Emory. You may hear a little sing-song accent on me at times with certain words because I grew up in the Caribbean, British Guyana, and now Guyana, and moved here when I was 17 years old, really for college. My mom moved my sister and me. It was time for me to go to school, and I got into Emory on a scholarship where I did econ and pre-med. Stayed at Emory for medical school and got into Harvard for my residency. That transition was my first kind of pain point and realization of how unfair capital markets are to doctors. When I was coming out of Emory, I had 212,000 of student loan debt. That is a little bit less than the average for a physician today. The average doctor is coming out with 228,000 that we see across our portfolio. I had a FICO score that was sub 700, not because of bad behavior. I had no bankruptcies, no delinquencies. It was really an immature credit score due to being in school for the entirety of my 20s and not having real debt to show responsible repayment history. And finally, I was making $13.12 an hour at Harvard as an intern. And it all felt unfair when the banks denied me my loan application. What we do at Doc2Doc is underwrite our loans more thoughtfully. So we don't just look at your FICO score and your debt to income ratios. We care about how many years you've got left in residency. We care what your specialty is. We care that you do have free cash after you pay your bills responsibly to find a way to get our rates more advantageous to our borrowers, but also to create flexibility in payment terms that I'll share more about in a moment. My co-founder, Dr. Kenton Allen, we met at Harvard. He's also an MD MBA like I am, and he went to Dartmouth. But his pain point was not in the relocation. It was more in the fact that he had uh, 2 kids and a wife in Boston, had his third kid shortly thereafter, and just couldn't afford to make ends meet for the daily kind of expenses of life being in New England on a resident salary. Our lending platform includes other physicians as well, that helps to do the onboarding of any new and approved member. We're able to onboard them and welcome them to our community. We've got orthopedic surgeons on here, anesthesiologists, we've got academic physicians, we've got private practice doctors, and the whole point is creating a feel like we're the USAA for doctors, right? So if you call and you've got a need, we know because we've lived it ourselves and we can provide the guidance to be empathetic lenders. The more expanded team, it's not just physicians. So we were able to recruit successfully a lot of the folks in the lending and financial services industry that are absolutely outstanding at what they do. So they're the real experts in the underpinning of the company. So our CFO, for instance, built a career at Bank of America Merrill Lynch. Our chief technology officer was at Kiva and Fairbank before we recruited him to us. GE Capital, you'll see here, Google, JP Morgan. We are able to kind of put the best combination of folks together to design our product to be the best fit for our customer profile. Now, I mentioned the problem that we all face as physicians, especially when we're early in the course of our career, is high debt, relatively low income, a delay in the maturation of our credit scores, and then of course busy schedules. When would we have the time to go into a bank and apply for a loan and fill out all the dozens of paperwork required to get that loan approved and underwritten? So we create a process to be frictionless and seamless to facilitate that process. We do believe as a company that doctors deserve to have better access to capital at rates that are more fair and at terms that are flexible, because we don't perform like the marketplace would expect us to, even if our credit profiles are relatively low. So a 620 FICO score physician does not default on their debt like a 620 FICO score anyone else, because we know exactly why a doctor would have a 620 FICO score. We do want to make sure that our docs have access to quick capital, because oftentimes the hardship happens quickly, and the stress and the emotional toll that it takes when you're struggling with finances and managing a patient load and dealing with the imposter syndrome of delivering upon a team and managing up to your senior residents and to your attendings is already quite onerous. And then finally, as a physician-led company, we want to ensure that we connect personally on a human level with each of our customers. So it feels less of a customer-lender relationship, but more of a peer group that's really kind of like-minded and helpful. This is what our product looks like. We lend up to $25,000 for folks that are still in training. If you have a contract in hand and you're about to graduate within 6 months, you get up to $50,000. And if you're in practice already, it's $100,000. It's a 5-year term, which is a relatively long term for an unsecured loan. With this loan, we have no collateral. So we don't ask you to put up your house or your business. This is based on the strength of you being a physician and having a credit profile that meets our eligibility criteria. One of the best features of our product is that we have no prepayment penalty. So think about if you're borrowing from us as a first-year resident and you begin to moonlight in your second or third year, you shouldn't take 5 years to pay this loan off. We encourage you to repay sooner, and we will apply any overpayment of our loan payment into the principal balance so that less interest will accrue. So you can think of our rates as a monthly interest rate because you can pay it off on any given month. Now, our proprietary algorithm, again, is tailored to know the challenges of doctors, and so we're able to be more competitive than some of the big names that you'll hear, like SoFi, Laurel Road, Splash Financial. And a part of it is due to the fact that those lenders will oftentimes not give loans to anyone with a FICO score beneath a certain floor. As the credit markets have been more challenging over the course of the last year, they've raised the floor that they'll lend to, meaning at one point in time, they would lend down to a 650 FICO score. Now it's a 680 for some, it's a 720 for others. So anyone less than a 680 for some lenders will not be even considered for an approval. We lend down to as low as 600 for our in-training doctors and 650 for our established docs. So if you're a resident or an intern or a fourth-year medical student, a 600 FICO score gets you eligible. Additionally, we cap our highest rates to be
600 FICO score.
That's exactly right, 600 FICO score. And so we cap our rate where it's less than the highest rate of our competitors, even though they don't lend down to as low of a FICO score as we do. The company has grown outstandingly over the course of the last 4 years. Issued our first loan in 2019, raised really 18 million from doctors. $80 million from doctors, I'm sorry, another 55 million from credit funds. And we've done initially 2 million in our first year, and last year 38.4 million, with intention of doing 60 million this year. You can see that we've processed over $189 million in applications, approved 156, and funded 96 million bucks in loans. Here's what our doctors say about us, and here's who they are, right? So we've got an anesthesiologist based in Michigan who used our loan for family planning and fertility treatments, Dr. Sasu. Dr. Hurst is an OBGYN resident, used it for her transition to residency, so kind of like my use case. And then Dr. Lahan is an established pediatrician, and her use case was debt consolidation. She had quite a bit of credit card debt that she wanted to have refinanced at a much lower rate, and we were able to facilitate that for her. What do our reviews say? If you Google us, you'll see that we have a few hundred Trustpilot reviews, and they're overwhelmingly 5 stars. I think we have less than 5 4-star reviews, and certainly nothing less than 4 stars. And we're proud of the fact that our reviews and our customers describe us using the same language that we aspire to have them describe us. Best, responsive, personalized, easy, excellent, efficient, and quick. All things that we're extremely proud of. Beyond our personal loan, over the course of the last 6 months, we've begun to introduce additional products because we've heard from our customers and saying, hey, I'd like to get a card in my wallet that understands the who I am as a doctor. So we've got the Doc2Doc credit card. It's a 0% APR for the first 6 months, followed by a rate that's prime plus 9. That is about half the rate of most other cards today. We do have a miles away rewards program that's a 3-2-1 reward. And if you spend 3,000 bucks on the card, you have your annual fee of $75 waived. We do offer practice buy-in loans for doctors becoming partners in their practices. We have business lines of credit for those of you that own your practice and need to access additional capital to scale and grow your business. We also have SBA loans and credit card processing and merchant financing. And so you'll find that Doc2Doc is able to kind of provide resources for the entire spectrum of physician, from medical graduate all the way through to retiring physician. We've partnered with an insurance company to offer med-mal insurance, tail coverage, staffing solutions as well, cyber and regulatory insurance, including directors and officers. And so we want to be the one-stop shop. If you think you have a need, much like veterans think about USAA for home insurance and automobile, we are that for physicians. Couple of quick things before I open up for questions here. Here are some of the things that our 4th-year medical students think about when they're looking to borrow from us. They're usually in that 25 to 35 age demographic. They're going to make 50,000 bucks as a resident, as an intern. They're oftentimes a household size of 1 to 4 people, where about 41% of us have kids while in training and 7% are pregnant while in training. There's a demographic breakdown of predominantly white. For residents in the US is 48.8%, and predominantly female as of a few years ago. We're now graduating more female medical students than males as within the last 5 years. And most often they're looking to borrow for that residency relocation. And they care about the fact that we have no prepayment penalties and our loan term is flexible, where they can have interest-only payments for the first half of their loan. The folks of you that are currently in residency, it's a similar kind of gender breakdown and racial breakdown, but oftentimes the pain point that folks in residency have, it's the student loan debt, relatively low income, and only being eligible for really high rate loans with busy schedules that kind of impact their ability to shop for a good product. And then the early career folks that are just graduated, they're oftentimes borrowing for life milestones. They're planning a wedding, they're getting engaged, they need to shore up their credit and consolidate debt as they look to buy their first home. IVF and surrogacy is a more frequent use case for many of our borrowers now. And the average household size is about 2 to 4 folks in this cohort. And then finally, the established doctors. Unfortunately, divorce is pretty high, and so they're often looking for ways to navigate the split from their partner. They're also looking to do investment opportunities. So it's surgery center buy-ins, it's real estate investment flips and the like. And so we have products for them as well. In summary, in closing, Doc2Doc motto is that we empower doctors and dentists through a smart, dedicated team. We stop at nothing to find creative solutions and believe in trust, accountability, and compassion to guide our member, team, and partner community relationships. Thank you so much for the opportunity to speak, and happy to entertain any questions you guys have over the course of the next few moments here.
Do we have any questions already? I could actually start by telling about how I used Doc2Doc. And I just want to say, Doc2Doc is not paying me to say anything right now. So this is like free speech right now, me giving you my story. I use
We
them.
appreciate that, Dr. Priscilla.
No
Thank you.
problem. I used them when I was transitioning into residency, and I had two issues that I was concerned about. One was credit card debt that I wanted to manage, and then I had been going through a really, really tough financial situation, and so I'm living in Florida, and I now have to get to a program that's in Ohio, and my program offers, I think they offered like 2,000, but anyone who knows about what it takes to travel from Florida to Ohio, maybe that pays for the truck. Maybe. That doesn't account for gas. That doesn't account for anything I need to purchase once I'm at the apartment, all that kind of stuff, not covered by, I mean, I honestly, I took that money, obviously. I was very grateful for the money that my program was able to give me, but it doesn't cover much. And then that, as well as credit card debt, because of the really tough financial situation I had been in, like he was talking about, my FICO score was low. Like I had just been through like a really rough spot. So my score was low and I couldn't imagine getting a good deal on anything. And one of the things that I thought was really amazing is that, so I go through this process with Doc2Doc. I talk with them. They set me up with somebody. I had a personal conversation one-on-one with someone who explained to me the loans. They explained to me the benefits. They talked me through the whole process essentially. One thing I hadn't realized or considered was the fact that this loan was different from, so a loan debt is different from credit card debt, this type of loan debt. And so I got the loan, and I must tell you that it was really pretty fast. The turnaround is actually pretty sweet that they have on it, but I get the loan and then I use it to pay off my credit card debt. And like within a month or so, you should have seen the turnaround on my score, because it's two different types of debt that you're dealing with. It actually using their loan to actually pay off my score, pay off my credit card, really improved my score also. So I got both money to help me with that transition to get to Ohio, because that, you can imagine, that's really expensive to move that far. And then to get improvement in my score was just a bonus on top of that. And I'm still, it's very fluid, like he said. They work with you. If my personal person that I worked with said, if you ever have any issues with paying it back, just let me know. So it's like you kind of develop this personal relationship with somebody, which I think is like all the words he was talking about: personal, responsible, all those different things. So that was how I used it. So with that, I'm going to open the floor back up to you guys and see if you guys have any questions about the process.
Thank you so much for sharing that. And we certainly appreciate your transparency and honesty. I think sometimes we suffer in silence as a cohort. Like we think it's a source of embarrassment to have financial challenges while we're in training and while we're aspiring to be physicians. And the truth is that there's so many of us that are in the same shoes. And we don't discuss this enough in our schools, and our training programs do not do a good enough job to kind of impart financial literacy on us. What you described about the difference between revolving debt, which are credit cards, compared to installment debt, is absolutely correct. And the more we can limit our spend on revolving credit cards, the better off we are. And if you have installment loans, mortgages, car loans, a Doc2Doc loan with monthly on-time payments, each on-time payment helps to improve your credit profile and shows that you're more responsible to lenders out there.
So there is a question in the chat. Someone said, as a fourth year planning to apply for a transition assistance, is the NRMP match letter all that is needed for eligibility?
That is correct. Yes, with the NRMP match letter, that's when you become eligible to be considered for Doc2Doc loan. And so on March 15th, or if you had an early match, you're eligible now. But if March 15th for the vast majority of fourth year students will become eligible then, and we will kind of handhold you through the process once you get eligibility. My email is on the slide deck as well. Please feel free to reach out to me via email. But if you have any questions, on our website, we've got a chat feature. And of course, we're partnered with this organization, and coming through the link that's in there, the Doc2Doc Lending ABFMP gets you a concierge that is familiar with our relationship that will handhold you through, thanks to the work of Doctors Walker and August, to get Doc2Docs a special program for the members of this group.
I'll also put that link up now, but feel free to ask more questions, you all.
What happens if someone SOAPs? What is specifically, because I think the letter is a little, or what you actually get if you end up going through the SOAP is different than if you matched or if you scramble.
Yeah. So match letter is just one way of saying that you have match eligibility. But if you have any evidence of having a spot, it could be a contract, it could be we need some verification documentation to prove that you will be starting into a training program in the course of the subsequent few months, so that we know that we can fund a loan to someone who's going to be employed. So we'll work out the details with you regardless of how you are able to prove that you're going to be employed on July 1st for most of you.
I'll ask questions that I think people might want to know the answer to. I briefly mentioned that it was a quick turnaround as far as the timeline is concerned. Can you talk more about the timeline as far as?
Sure. Absolutely. So the application is at this link, and it takes about 3.5 to 4 minutes to complete the entire application. We were able to give a response, an approval, or denial within about 1 minute after you apply. Then the next step is verification of identity and income. And that really, we can move as fast as the applicant moves. So if you submit your pay stubs, your match letter, whatever it is quickly, we can then ingest those documents and come up with not just the conditional approval, but put you for a disbursement date that's going to be within 4 business days from that time. And so we can get you from application to funded loan within about 5 business days if you move quickly.
There's a question in the chat says, can you take out more than one loan? Let's say if you need one later in life.
Yes, you most certainly can. And actually, about 30% of our members are repeat customers. So let's say you're eligible to borrow 25,000 bucks and you borrow 10, you can come back later and borrow the remaining 15. If you borrowed from us while you're in residency and you were capped at 25 and now you've graduated, or you want to get a bridge loan, you can borrow up to 50 or 100,000 as well. So a part of why we do what we do is to ensure we treat you well enough for you to want to come back. So we want to have the 4th year med student who comes back when they're graduating from residency to say, hey, I'm relocating for my first job. I want to borrow 75,000 bucks now. Then they come back and say, hey, I became partner in my practice. I need to borrow 350K. I want to say, hey, I need to get med mal insurance. I trust you guys. I like you guys. So I want to work with you all first. So the whole point is ensuring that we provide value and treat folks well enough for them to remain a part of our community. And that's our promise and pledge to you all.
Another question in the chat, what are some of the things that would make an applicant ineligible? Are any of those
Great.
things that applicant can adjust to have a more favorable outcome?
Sure. Biggest factor would be FICO score less than 600 if you are in training, or less than 650 if you're in practice. If you have an active bankruptcy within the past 7 years, that makes you ineligible. If someone has board license suspensions or any kind of reprimands by the board, that can make you ineligible as well. And then current collections accounts that have a balance of greater than $300, that can make you ineligible. All those things will impact your credit profile in a way that's disadvantageous. If you are ineligible, we can't tell you the specifics on your credit report that made you ineligible, but we do send an adverse action letter, and a copy of your credit profile will be sent out by TransUnion so you can see, and then try to repair those things on your own. You can do both a loan and credit card at the same time. Yes, you can. The application process is not the same, but after you apply for either one, we can help you figure out your application for the second, and if your use case and needs will fit both, or if one or the other is better for you. This has been great. You guys are an engaging group. And I look forward to continuing the conversation and dialogue. This is recorded, so you all have it. The link is here. Use that link as you interact with us. And again, I'm Zwade Marshall. I'm CEO, co-founder of Doc2Doc. My email is Zwade, ZWADE @doc2doclending.com. Please do email me. I'll be happy to be a resource to any of you. And we've got a team of folks waiting to be a concierge for this group because of our partnership. So thank you for the time and the interest and all the questions.
There's another question in the chat.
Sure. Yes, it's a Visa card, so it's accepted everywhere that Visa is accepted. Yes.
And anyone else have
Renee.
any burning questions?
I just also wanted to put a reminder that we will be honoring asking questions for about 5 minutes without recording as well. Seems there are no other questions. So I'm going to stop the recording, and then if there are additional, oh, there's one more.
A physician's loan, that's a general term that could be mean anything. I think there's physician loans for mortgages, there's physician loans for commercial loans. So it's I don't know if it's similar to a physician's loan, but it's a personal or consumer loan that's designed for physicians.
Brian, do you want to?
All right, so let's go ahead and stop the recording. Thank you so much, Dr. Marshall, for your time. And
You're very welcome.